Now, it's great to be here in our project's home state. This is the first time I've spoken at this conference, and it'll be wonderful not having to explain to a group of painfully West Australian-focused investors why this is the best place in the world to be developing a mine. I noted at a conference in February that the gold people were insufferably happy, and it's not a zero-sum game, so I'm happy to see that they are still happy. I predicted that we would see a lot of volatility in copper, and wow, did that deliver, hey? I'm going to resist the temptation to talk too much about markets, and I'm certainly not going to mention the T word. But one thing I will say is that I'm unashamedly a mineral economist first, and the bit that people, I think, often miss in mineral economics is that not all commodity markets are the same. Copper is a $265 billion market, roughly, although, again, the T-word's trying to make that lower at the moment. That's about 20 lithiums. It's about 30 cobalts. It's about 50 high-purity aluminas. So we're talking about a huge market that has huge demand. $50 billion of demand change in copper doesn't move things, but to put it in context, that's the thick end of 10 times the entire cobalt market. And so what we see here is this incredible volatility, but the fundamentals of supply and demand haven't changed. We are moving towards decarbonisation. It's a transition, not a switch. It's going to take time. As the previous presenter, Richard, mentioned, China's really going hard on EVs. They have a very large demand on this. So what I'll say here is don't expect to see that enormous price volatility in copper, but do understand on the supply side, the projects that are being discovered now are deeper. They are in more challenging locations, and they are metallurgically more complex than before. 80% of the world's copper supply comes from about 20 companies, and those mines are getting deeper, they're getting mined out, and one or two of these major mines coming offline need to be replaced by multiples of every copper company presenting here today. So in that context, I believe this time next year, the copper people will be insufferably happy too. But it is going to be an interesting ride. Now, I think I've said before, I'm a pretty insufferably happy person anyway. I seem to be blessed that way with my brain chemicals, but a lot of that is also driven by having a great company to work with and a great board to work with. This board has put 17 projects into production, which I should say, Robin and Paul alone have put 17 projects into production over their careers. Keith, our chairman, has put over $1.5 million into this company of his own cash. He's very involved. He's a phenomenal chairman. This is a board that works well together, that has a history of developing and delivering on projects. Cole Moorhead, our lead geological advisor, again, is on the board of Ramelius, Xanadu, and again, somebody else with a track record of delivering multi-billion-dollar projects. So we've got civil engineering, mechanical engineering, mining engineering, geology on the board, plus accounting and oversight. We've been pretty disciplined. A lot of that's driven by myself and Keith, both financial people. Just 250 million shares on issue since listing 4 years ago. Keith is our equal second largest shareholder, and again, has put a lot of money into this company himself. 6 million as at the last quarterly, very strong cash balance for a junior. So from a market cap point of view, we're at the midpoint on the ASX. From a cash point of view, we're well into the first quartile of cash balances. That gives us the ability to get on and deliver the catalysts that you as shareholders want to see. So I tend to do this a bit differently, ask myself a few questions, because we don't do a Q&A here, but after years of running public companies and responding on the info line, info@codaminerals.com if you've got any questions. We even have our own podcast. Sounds ridiculous, but it's getting 300 to 400 views per episode. And again, that tells me that Coda has a great sentiment. A lot of people are watching us in terms of that copper market and in terms of our next steps. So in terms of location, just 6 hours north of Adelaide, very close to Pimba. I'm sure many of you have driven past Spud's Roadhouse and the town of Woomera. It's a fantastic location. We're surrounded on all sides by BHP and FMG. We are very much in copper elephant country. Now, about 3 years ago now, 3.5 years ago, we hit an IOCG. So the famous iron oxide copper gold that this area is so well known for, that Carrapateena, BHP, Olympic Dam, Oak Dam West. But we were doing that as a side quest. Our main project, the project that we focused on, is somewhat more interesting. It's a Zambian style or a Central European style copper, cobalt, silver that lives in South Australia. And to the best of my knowledge, with only about one exception, nearly all of this occurs on our tenure. So you have this Tapley shale. It's a very soft shale, very similar to the Kupferschiefer in Germany and Poland, that's mined down to 30 centimetre thicknesses in places. It processes very well. And one of the misnomers about the project, and it drives me mad, is that the IOCG we hit was at 800 metres. Now, that's relatively shallow compared to Oak Dam West. That doesn't really get good until about 1100. But most of our mineralisation, well, all of our mineralisation, is either in open pits or it's at just 400 metres, sitting beautifully sandwiched between two very competent sandstones, which makes the mining a very strong proposition. So the open pits, to about 25% of our mineralisation sitting in open pits. The MG14 deposit, just 14 metres below dune sand. Look at those grades. I mean, you've got, sorry, that's Windabout, one back. You've got MG14, so just look at those grades, 1.4% primary copper in the mine plan. It's small, but it's incredibly high grade and it processes very, very well just below dune sand. You don't see a lot of 1% plus copper deposits in open pits anymore, anywhere on the planet. They're mined down to about 0.2%. Average global mine grade's about 0.57. And we're talking 1.4 primary plus the cobalt credits. Our worst deposit, Windabout, still over 1% primary copper. With the cobalt credits, that comes up to about 1.7. It's phenomenal stuff. I'll talk about the cobalt in a minute because it's one of our secret weapons. It's phenomenal. Emmy Bluff, according to an Oz Minerals presentation when BHP was sort of trying to take them over at the time, they put out a presentation comparing all of the different copper deposits in Australia. Now, if I did that, the ASX wouldn't be very impressed, but somehow Oz Minerals got away with it, so I can quote them. And they identified Emmy Bluff as the 11th largest primary copper deposit in Australia, just to put that in context. So it's a significant scale, significant deposit, lovely little flat-lying deposit, 40 million tonnes at 1.3 in the resource. That mine plan, 32 million tonnes over life of mine at 1.8 equivalent. We unashamedly use equivalents. It can be a naughty trick that juniors play, but we understand the metallurgy of this deposit very well. I've spent 7 years of my life working with this metallurgy, and we've delivered a lot with it. And so we feel very comfortable in saying this is what you're going to get out of the mill. I'll leave you to read this at your own time. It's on the ASX, but for compliance and detail. Now, getting on to question 2. The ore body looks remarkably flat, like a coal seam. How are you going to mine that? This was asked of me of a very well-known fundie, so I thought it's a good question to bring to you. We have 2 mine plans, very conventional long-hole open stoping. The second one, the current base case, uses what I call Big Chompy, which is a mechanical cutter, a continuous miner, specifically developed for medium rock environment. So this dolomitic shale is very soft, it's very unabrasive, and it's a really nice mineralisation to be working with. So we have 2 mine plans, one very conventional, one slightly less conventional, and our view is this is going to work very well. Just look at this ground, by the way. I mean, absolutely phenomenal for mining. South Australia, wonderful ESG. We work, the traditional owners are the Coda people, just the best TOs, frankly, in the country. Awesome people to work with, very commercial. They understand this area, worked with BHP and Oz Minerals for a long time. And so there's a lot of those things that hold up projects are actually a real advantage for us being in South Australia. So the mine plan here, you can see it sort of gets developed as panels over the life of mine, roughly 13 years. You've got a grout packing refill, which means you get well over about 85% extraction from this. So in terms of the mining, that gives us a lot of confidence. Now the cobalt, sometimes the elephant in the room. A lot of cobalt in Australia, especially South Australia, is locked up with iron sulfides. This makes it very, very hard to process. You've got to separate that cobalt from the iron. That means challenging pyrometallurgical processes. Ours, weirdly, is kerolite. Flow sheet looks a bit scary, but they always do. There's a lot of equipment, but this is relatively simple. It's just off-the-shelf stuff that's used in mines all over the world, bolted together. Flotation, followed by Albion, followed by SXEW, and cobalt crystallization. So why does it work so well? Because it's kerolite. Kerolite is the main mineral you find in the Kupferschiefer and also all over the Zambian copper belt. It's well understood. There's a lot of metallurgists who have worked with this overseas. Again, very rare. To my best of my knowledge, it's the only occurrence of this stuff in Australia. And again, cobalt sometimes can be considered challenging. For us, quite the opposite. Look at those recoveries, just absolutely superb. In terms of economics, $1.2 billion pre-tax for the grown-ups. That's 802 post-tax. I'll never understand why juniors push the pre-tax, but anyway. That's against a pre-production capex requirement of about $330 million. Juniors financing projects always face challenges, yet for good projects, they do always resolve them. Our job is to make sure we resolve them well and for our shareholders to be rewarded for that. With these economics, that gives us a lot of room for movement because it is a very economic project. About 27,000 tonnes of copper over life of mine, so a decent, what I call a good solid mid-tier project. It's not the 100,000 of, the big BHP projects, but it's a major part of that future supply from a manageable capex. $1.80 US dollars AIC per pound. Copper's trading at about $4 a pound this morning, has been up to $5 over the last little while. So what's going to drive the next technological and economic challenges and catalysts? What are the next big things for us? Those recoveries, we've done so much with this. We've taken it from just the 50% recoveries. So for every ton of copper, the original people working on this were getting just over half of that out. We now got 83%. That's through hard yards, technical work and innovation. We are currently piloting whole ore leaching. I'm hoping to get some proper information out very soon. As you know the rules, you need a full JORC Table 1. So when we have that, we will get that out to market. That has the potential to replace both flotation and albion. If you saw that big scary flow sheet earlier, it's not scary, it's pretty solid. Taking half of that out and replacing it with a whole ore leach would have pretty awesome impacts on this project. As a second thing, taking out the Albion circuit and reducing the CapEx and OpEx from that, another major catalyst. So two big irons in the fire here, both have game-changing potential. Make no mistake, these are big and worthwhile things. In terms of exploration upside, we've got a pretty big project, over 1 million tonnes contained in the sedimentary alone. The last work we did identified another basin of mineralized tapley you can see just down here. That's interesting. That tells me the resource is likely to grow as we sort of start to fill it in. Usually they get smaller as you get more geologically confident. We're already in JORC indicated. We still have room to grow. It's probably not game-changing in terms of doubling it or anything like that, but it's a nice increase from an already very large project. Underneath, the gift that gave and then kind of we had to stop due to economic circumstances and the sheer cost of drilling deep holes, the IOCG. Nothing I've spoken to you today, any mine plans, resources, anything else involves this enormous amount of mineralization in the basement. These are the best intercepts on the Gawler Craton, not currently owned by BHP. Bornite-dominated holes, all of the things you want to see in a major IOCG. 2-kilometre corridor by about 900 metres, bookended by ore-grade intercepts. Yes, it's going to take a partner to drill it. We're not going to spend shareholder cash right now on drilling 1,000-metre holes, but we have been in talks for a long time with a number of groups. I think there's really improving sentiment out there. I often shy away from talking about the ICG, but there's this incredible 2,000 by 900-metre corridor, bookended by ore-grade intercepts, underneath our main deposit. People confuse it. They think we're going to try and mine at 800 meters with the main plan. We're not. It's all relatively simple, relatively shallow mining in the main plan. But this is an exciting upside. Again, there's plenty of stuff online on this, so I'll quickly run through this and summarize given time. What's the spark that gets us to the next stage? Simply put, the same challenge that every junior with a great project faces, especially when the market's been volatile and challenging. We need to find the right funding mechanisms to go forwards. How do we do that? Technological innovation, driving those major flotation, recovery improvements, process improvements, getting the right group. I often say this project will absolutely be a mine one day. Our job is to make sure that delivers great economic outcomes for our shareholders. And believe you and me, that's what we're going to do. Thank you very much.